Welcome to Forex Films. Today is August 18th, 2011, and what we're looking at here is a 4-hour chart of the Euro-US dollar. But first I want to talk about the major event of today, which was the Philadelphia Fed survey. It showed that manufacturing made a huge drop. We're expecting a drop from 2 from 3.2, I believe, and we dropped all the way to negative 30.7. Stocks are down huge, of course, and the US dollar got some good continuation. But if you have been watching the markets or looking at my analysis, you will know that we were already positioned for that technical US dollar rebound. And what I was looking at here was really a reversal before this previous high, which we got, but it came scarily close, and then we had a move down, second wave move up, and now we're getting great continuation to the downside, and I expect it to continue for a long time. So you can see here where our short-term trend support would have been, and we've decisively broken through that. Let's move out to the daily chart. As you can see, there's this EMA that we were able to close back above, but we are now moving down below it once again. I think that's a great sign. More continuation lower. And trying to count this, still like this is wave 1 down, A, B, C, which is a horrible truncation, but it looks like the euro is just that bearish that we're going to have a horrible truncation like that. And back to the short term to count the shorter term waves. This is actually another subdivision, wave 1, a leading diagonal, and we got 1, 2, 3, 4, 5 for wave 1, A, B, C for wave 2 of the correction, and a wave 3, possibly of 3 lower. So I expect sharp, very intense downtrend starting now, but we could have further subdivisions. The only thing is, once we get past the bottom of this leading diagonal, that always or almost always is a very sharp move. So let's look at some other pairs. AUD-USD, we have wave 1, 2, 3 here, 4, 5, A, B, C, 2 complete, and we will move down lower now. And if we draw a short-term support line here, just because this is very interesting and harder to see, you can see that we came under this short-term support line, came back up to new highs, hit the underside, and moved lower. This is really the only time you'll ever find me shorting Australian US dollar, is when you have a move that is that high probability, because I don't ever want to hold it, especially over Wednesday night, unless I'm guaranteeing myself that I'll make up for it the next day. And this pair has had very good continuation. I expect it to continue happening, but I'm trading the shorter term. My bigger positions on commodity pairs is more on New Zealand US dollar, and doing very good shorting that pair right now. Here is the dollar yen, backed out to a daily chart. Been using shorter term charts lately, but the short term patterns really look like we have a greater chance of moving up. So I got out of my position on this pair, because there's so many great opportunities right now, and I don't need to keep holding risk on this, especially after I've made 300 pips or more. So the way to count this is we have our wave A up here, and this would be wave B. That's if we do go higher. I still expect this to drop, but I'm not willing to risk my money on it anymore. As you can see, here's that wave A, B. We would probably find resistance in here somewhere, maybe about low 87s, possibly low 86s, but there's not very much resistance there to start that turn. Pound dollar. I'm really liking this one too. I think we can see a lot of good downward continuation. This had no fundamental basis at all, but because of technicals shot way higher just so we could complete this ABC pattern. Even though this looks very disproportionate, though it does also on the euro. This is wave 1, A, B, and the top of wave C. But the difference here is that this is very common for wave 1 and 2 and the British pound. It always has this exaggerated second wave before the third wave moved down. Third wave can be very powerful. It's always very good to trade. Dollar Swiss. This has finally made into a consolidation pattern, and it started to move lower. I actually got short this pair, and I'm hopeful still on it going lower. We've met with quite a bit of resistance. This is the 4-hour chart, and Swiss National Bank decided they were not going to peg the Swiss franc to the euro, at least not yet. Their threat obviously worked very well, so they're probably happy with that. Plus, they have set no target for the Swiss franc, which is smart, leaves all their options available. But I was hoping we would see more bullish reaction from the Swiss franc on this news. We still haven't got it. Still kind of meandering for the past couple days, but I think we need a correction down to at least 76.50, even if we have made a long-term reversal here in the dollar Swiss, though there is still that chance. See how we have this medium-term resistance line here. There's still a good chance that this is possibly wave 1, 2, 3, 4, and we'll have one more low, possibly only down to 0.70 as the final low in wave 5. But we'll see how this plays out. I like it short, at least for a limited time, and I'll probably get out after like 300 pip profit or something like that. Dollar CAD. Now I predicted the rise on this after a 2 or 3 day failure for this to pull lower. And when we have a pattern like this where we have a few tests down, I'm usually pretty confident that we're going to shoot lower. But watching other pairs looked very likely that the US dollar was going to start gaining. So I felt this would go higher, and of course it has. And we'll see just how far it can go, but I think this will break parity this time. It did last time, but it was very minor break and was quickly retraced. So I think this is a very good pair to trade higher. Last but not least, the New Zealand US dollar. And this has given me lots of profit today, so I don't want to play it down too much. But this was a major help in me determining Aussie direction and CAD direction, because the downward move from this peak here up above 88 down to 79 was really impossible to count any way but five-wave pattern. So the New Zealand dollar was instrumental in my success to buy these dips and get on this three-wave correction and trade lower, which is very good reason to watch multiple pairs, trade multiple pairs. And one pair is not always going to help you out. There's so many options, so many profitable opportunities out there. It's just too good to watch a lot and stay away from a narrow focus. But that's really it for today. Jobless claims came in a little bit worse than expected, but not really a big deal. US-CPI was slightly higher than expected and really pointless to even discuss. I think we get some good market moving, but very little good market moving stuff tomorrow. So I'll discuss that in my Forex daily in the morning. Thanks for watching. Good luck trading. Keep trading the US dollar long.